The Fiscal Fortress, where wealth meets wisdom.
Hey, Michelle, it's great to see you as always. How are you doing?
I'm good. How are you?
Doing well. It's been a very, very hectic week, both personally, but also in the markets. We're recording this on a Friday, the Friday after Liberation Day, the start of Trump's global tariff war. So, as a hedge fund manager, very, very busy.
Yeah, there's a lot of negativity going on in the stock market.
That's true. Yeah, I'm usually, a glass half full kind of guy looking for the silver lining. It's really hard to find one here. It's it's
Yeah,
it's a lot of negativity.
yeah, and it's a real test of the markets and whether or not there's still going to be people who come in and buy on the on just the opportunity, or whether or not people are so pessimistic they're just expecting further drops.
Yeah. Just a quick, plug for viewers of this episode. We would be extremely grateful if you enjoy this content to please share it with others, to like, to subscribe. And if you have any questions about what we discuss, feel free to reach out to either of us. Our emails are below. And always, we're looking for additional topics. So feel free to post comments and we will absolutely address those comments on the show. I guess I will say before we get into the topic for today that there is one, the argument the Trump administration would throw out there is that give it time, imposing massive tariffs on every trading virtually, I guess it's every trading partner in the world. This is part of a larger strategy, and countries will start negotiating. And Exhibit A, check out my Truth Social post today where, Vietnam said that they might start negotiating with the United States. So that's what he would say. Honestly, I'd like for that to be true, but I think we'll see here very shortly. You are seeing in the short term a lot of countries throwing up and pushing back by instituting retaliatory tariffs. China did it, Canada did it, the EU is probably going to do it. So we'll see, but it's definitely a scary time right now if you're a stock market investor, and especially if you are depending on your stock market investments to carry you into retirement and you're planning to retire relatively soon.
Yes, it causes a lot of anxiety for people of all ages, but especially those that are on a fixed income.
Yeah, 100%. And increasingly, and this is not a new thing, but I hear jokes all the time about people wanting to move out of the country. And you and I are from Canada, and people are saying, "Oh, I'm gonna head to Canada or leave the country." And I think now, as as Trump continues to press his agenda and more things happen, and we haven't even talked about like other things like the potential constitutional crisis and uh, a lot of his policies. People are thinking about whether, I don't know if they're serious, but whether they should consider relocating. And for today's episode, I'm really interested in hearing about like what the implications of that would be from a tax and legal perspective if people were to do that.
Hmm. There's happy to chat about it today. I mean, that is the topic we're going to cover is very complicated because there's two major parts. One where a US citizen is leaving the US to live abroad, and then the other half of that equation and analysis is where a non-US citizen is living in the US and what tax implications that has. Because those are different considerations, but it comes across a lot where there's a lot of Canadians or people that my clients who are from Asia who have assets in the U.S. and what happens on from a tax perspective if they are if they're a resident alien or a non-resident alien in the U.S. So a lot of different perspectives.
Yeah, and we should maybe, just touch upon each of them, at a high level because as you say, it's a very complicated topic. So it's probably this is the sort of thing that you probably our viewers should talk to an attorney about. But we could kind of throw out some high level considerations. I think another thing, I know that U.S. citizens moving abroad. I put those in two flavors. I think there are some people who may want are thinking about relocating to the EU or Canada or also, and I also think that there's other people who maybe they're retired or they're thinking about spending some of their time in Europe or I know some friends are currently thinking are in the process of getting Italian citizenship, and other people in the past have gone to Portugal. So I personally would be really interested in hearing about that too. If you're kind of a part time person elsewhere, if that's what we should be thinking about.
Mhm. Well, we can jump right in terms of the if there are U.S. citizens who are just sick and tired of living here because of the amount of uncertainty and all the, stock markets going down, um, then there is an option of leaving the U.S. And there's two ways to do it. Either they renounce their citizenship and really cut all ties with the U.S. But that can be very drastic because getting back into the country, getting citizenship back can be that's going to have consequences. You might have to start from at the back of the line. So that's something to think about closely. And before doing that, you got to talk to a professional about what assets you have, right? Because very briefly, if you have real estate in the U.S., let's say the person has real estate in California, and then they continue to hold it. They don't sell it. They want to leave it for their kids. And they're going to not be a citizen anymore and go over to Europe. There's going to be a problem because the estate tax threshold for a non US citizen who's a non resident, instead of dealing with the huge exemption of 14 million that is available, it's going to go down to 60,000. And so there's going to be a tremendous amount of estate tax that would be applied to that real estate if they held on to it.
So let me just get this straight. So if you decide to renounce your U.S. citizenship and you have a lot of assets, what you're saying is that your kids could be subject to a very large inheritance tax because you won't get
Correct.
this exemption. Is that the bottom line?
That's
Okay.
right. So we would go from 14 million to
Right.
60,000. And if you have a $5 million piece of real estate, you can imagine how much would be taxed if the threshold is 60,000 at 40%.
One of the reasons I think a lot of Americans, might consider leaving the country or renouncing their citizenship is, and I actually can't think of that many reasons you'd want to do that, but one of them would be this idea of worldwide tax. They're trying to get around that. Can you just elaborate on what that is and just taking a step back, why would people want to renounce their citizenship? Like it's such a desirable passport to have. I think those are two questions that would be top of mind for many people.
Hmm. Sure. The answer why people don't want to have a U.S. citizenship is because the U.S. taxes on worldwide income. So that means that in order to come clean, if you want to stay legal and cross all your T's and dot all your I's, every single piece of income that you earn around the world, even if you don't live in the U.S., so long as you are a citizen, is going to be it has to be reported on an annual tax return every year.
Right.
And so some people don't like it.
And if I'm not mistaken, I had understood that the United States is one of the few or maybe the only country who does that. Is that true?
It's one of the fewest, yeah. I mean, it's hard for me to know the all the countries and how they tax, but I would say it is definitely a very heavy-handed approach to taxing a citizen on worldwide income. Now, in all fairness, there are going to be treaties to avoid double taxation, but that is definitely going to require hiring professionals to make sure that those treaties are reviewed, and you have to hire somebody who is gonna be competent to know avoid double taxation. So, in any event, the costs will go up by remaining as a U.S. citizen. While there's a lot of good reasons, like a lot of, there's a lot of, political rights that you can freedom that you have as a U.S. citizen compared to other countries. Um, the problem is that you can expect to have to declare all your income or hire a very qualified CPA that can avoid the double taxation. And if someone is in that position, I can certainly refer them to these types of CPAs.
Right. I can imagine, just to put it into context, that likely situations that we're talking about are maybe like one I can think of offhand is maybe you're deciding to move overseas to start a business, or you marry somebody and you just, your assets and your income is generated overseas. It's probably less important if you have you have your business here in the United States. Like, that doesn't really make sense. You probably wouldn't do that. But I guess the other situation would be you've worked a long time, you have a ton of assets in the United States, savings, stocks and bonds, and your house and everything. And then you decide to move to retire somewhere else. Like, what is for a person in that scenario? Um, would they really care about the worldwide taxation? Because most of their assets are in the United States, right? Their productive assets.
That's right. As long as they don't have a lot of other income going on in other countries, then they're just going to carry on life as usual, right? Business as usual. They will just have, they will continue to file their income taxes since the majority of their assets and income is in the U.S. And then they they don't have much income elsewhere. But the question is also then, are they considered a resident in that country? And what type of taxation is going to be imposed on the U.S. income by living in a different country? Because that country might want to impose taxes
Right.
for living there.
Yeah. And I know personally, a lot of people from other countries who, started businesses, in Asia as an example, and then came to the US maybe to spend more time with their kids and naturalize. But for whatever reason, maybe they want to go back to the homeland. So this would be a very applicable analysis and a very acute problem, because if they don't renounce American citizenship, then they really would have to figure out how to get these tax credits. And maybe we could elaborate on that. Like, you had mentioned that there are ways that even if you are subject to worldwide taxation, maybe you could reduce the tax liability. Could you elaborate on that?
Mm-hmm. Sure. So let's say for Canada and the US. So for instance, I have a retirement account in Canada. Now that retirement account is going to grow, and I need to report that account into the U.S. tax return. So that has to be done, and that can't be forgotten because there's that whole FBAR requirement to disclose that. Now, if I had other accounts that were generating income, then I would be subject to income that is in the US because it's worldwide income since it's in Canada. But Canada might also need to charge me an income tax. I'd have to file an income tax return in Canada because I am generating income in Canada. And that bank is going to send me a statement every year to report that on the tax return. And so there could be a double taxation. And in that event, there would have to be some recognition, and therefore that you've paid taxes and declared it in a different country, and therefore you shouldn't have to pay taxes in Canada and in the U.S. So it's the same thing with. I'm not sure how the laws, how the reporting works in Hong Kong, but I do know that there's a 15% income tax. Flat tax for income there. And a lot of my clients are living over there, and they pay that income. They're making an income in Hong Kong, but in terms of the income that they're making in the US, I mean, I would think that they're not going to be paying the 15% tax in Hong Kong for their Hong Kong income, and then also be paying income tax in the US because of that. So there's going to have to be some professional that can recognize
Yeah.
the fact that they've paid the 15%.
The tactic here would be to ensure that the United States and Hong Kong or other jurisdictions have some sort of treaty where you could offset those taxes or take them as a credit to you. You basically aren't, hit twice, right? Like you get credit for that, and your income is that correspondingly reduced for United States purposes.
Mhm.
Is that correct? And can you also talk about the countries that have these types of arrangements with the United States?
Yes, so Canada and the US has a treaty, and then there's also a treaty with the UK as well. And so most of the countries with a good legal and financial system have something in place. The only thing is with the Asian countries that are more developing, it could be something that is really just a moving target, that there's no predictability with how things are taxed between the US. There's definitely some disconnect going on between China's system and the US system. So, my clients who have assets here and also continue to run a business in China, they definitely have to, they will just continue to remain as a non citizen. That is often the case
Hmm.
that in the cases that I see, that one of the spouses remains as a non citizen, while the spouse that is the citizen with the children in the US is a citizen of the US. So,
I see.
um, but then that brings us into another discussion that when they come to me and they want to set up a trust, then I'll have either a scenario where both spouses that want a trust done in the US are both non citizens, and one where only one is a non citizen. In either event, there needs to be a trust called a qualified domestic trust, which defers the taxes that would otherwise be triggered when when a non citizen inherits the money. So there's definitely that. Remember the 60,000 that we
Yeah.
mentioned? That when a non-citizen receives, money in surplus of 60,000, a 40% tax applies, and the reason for this trust is to defer that.
Yeah. But now these are, this is already getting very, very complicated. And so if you are somebody who, had it, one of the spouses or family member is non-US or you've got business overseas, it's absolutely critical to talk to somebody who can map out all these possibilities and demystify this and to try to plan in a way that minimizes your tax liability. It seems so crystal clear that that's just a must do because this seems like a trap for the unwary. Like if you just stick your head in the sand, this could really come back to bite you.
That's right, and if just if a person is impulsive and says, "I'm sick of this government, I'm out of here," and then realizes that they ran afoul of the reporting requirements, they could get into another bad experience where they're suddenly being paid. They have to pay penalties.
Well, let's talk about that. So, the United States and China are not on very good terms, especially after this trade war. You had mentioned, there's in that one example, maybe one spouse, the non-US citizen, is in Hong Kong working. Maybe they're operating a business and factories and things like that. The rest of the family is in the United States, and so technically, um, if that person were a US citizen, they'd have to report the revenue from China. How would the United States, because the two countries don't, really cooperate there that much, how would the United States find out? And should somebody consider just risking it, just assuming that the United States will never catch on?
Well, that's the thing is that I'm sure a lot of people are risking it, but anytime you hire a professional involved, then I have to explain what needs to happen, that they do have to report all worldwide income, and if there's joint assets, and if the citizen spouse who's here with the kids has their name on a Chinese bank account, then they would have to report it. So unless all the accounts and factories and operations in a different country are under the non-citizen spouse,
Mm.
then somehow the citizen spouse would need to report anything in a joint name. And I would not be surprised if people do take a risk. But anytime you hire a professional in there, you're basically getting the professional to endorse and stand by the client. So clearly, the client has to do all the right things.
Yeah, for sure. Yeah, we're all, required and should abide by the law. And it's just really important that when you talk to your professional, that you're really transparent about what you're doing. There's confidentiality. That way you can get an accurate read on the risk. And if you decide to take a course of action, then your professional can, ensure that you're going in with your eyes open and you're dotting the I's, crossing the T's, structuring things in the way that you want. And I think it's just, again, reinforces the need to not just disregard these issues, but to really collaborate closely with somebody who's an expert here.
Yeah, and things have really changed in the last 10, 20 years because for those that are old enough, they remember how it used to be that the Swiss bank accounts were very secret. And this whole FBAR requirement and needing to disclose accounts abroad is something that, 20 plus years ago, nobody would have imagined because the whole point of having a bank account in Switzerland is so that you don't need to. You have privacy, but they were forced to have to share the names and of the bank account holders, and because of that, we're here where we are.
It's such an important point because, and this, I don't remember if Trump did that, but the point is that the United States government was suspecting that there were people who were defrauding the US government and using Swiss banks as a way to cover up these secret accounts. And, you know, everybody can form their own judgment about what they think about the current administration. But the one thing that's pretty clear is they are on a mission to root out fraud and abuse. And, with companies, they are strong arming them to bring their operations back and intellectual property back to the United States. So we don't have a crystal ball, but the United States has a very, very strong incentive to figure out who's bending the rules and breaking the rules. So it's just something to really pay attention to and to potentially to take really seriously.
Yep. And I think personally it's become even more important because there's a lot of cybercrime going on, there's a lot of fraud. And in order for someone to want the protection of the US government, they really should come clean on what they own. Otherwise, we're going to have crooks that are in the US citizen, going to be the crooks are a US citizen and being protected by this country without having to disclose. So I think maybe this wasn't as a real of an issue maybe 20 plus years ago, but right now there's a lot of big amounts of money that are being transferred back and forth, and the government should find out what's going on.
Well, that's a really great place to park it, Michelle. I think the bottom line is, this stuff is complicated. It was complicated before, but with the laws changing, and I mean, you see this on the global stage in trade, but tax policy, it's so important that you pay attention to this stuff, and would encourage you to contact Michelle if you have any questions. She's got a really amazing network and can refer you to accountants and tax advisors, and she's an expert in cross-border legal affairs. And if you have any questions about the markets, I'm always here to help as well. So really, really enjoyed today's topic, Michelle. I'll talk to you next episode.
Thanks for tuning in, and glad to see you all today.
Yeah. Thanks very much.
The Fiscal Fortress, where wealth meets wisdom.